What's going on, guys? Welcome back. Apologies for the delay, the small delay on today's live stream. How are we all doing? Hope everyone is well. So you know how these live stream goes. Today is the first day of the week, and we are showcasing the setups that we posted yesterday, which were the outlooks for this week's price action on euro and gold. Now, as it stands, you guys know what we're looking for in terms of bias. We have a very clear bearish bias for these pairs. We've of course discussed this in our forex live streams and our live market setups. So let's just go over what we posted last week. So we had euro last week, and we discussed that the principle here is the probability is that pricing will just continue traveling down. Now, we said that our bearish bias was the main idea here, and we had a couple of points to reference from, one being the area of supply, and then of course we had price running up to the high, which was the least probable, and the main scenario we were looking at was price running the low. We had a liquid target low, and we expected price action to continue heading down. Now, if we play this, you'll see that price action actually played out pretty perfectly to what we expected. Now, it did play off of this area of trajectory, but like I said before, this is more of a reference for direction than it is a trend line for breakout. So keeping that principle in mind is something that you really have to be aware of. So this was last week's markup, and this week we gave out the idea of this, which again looks super simple. It's because it is. We don't like to have anything too complicated because realistically we are only looking at probability in terms of pricing moving in a given direction. Now, you guys know, if you join my live streams on a regular basis, that we have a very easy way of defining a bias, and until that is changed, we will always suspect the same thing to happen. So as you can see right here, we gave out the idea that we may pull back and take out this high. We may also play into the area of supply that was left behind, again giving us a bearish move, but ultimately we're expecting pricing to just continue going down. And so I've said this before, that if we have a clear bearish scenario and a clear bearish indication, and our bias is bearish, then expecting a pullback is pricing to go against your biasing, right? So when you have a relatively consistent bias, which you guys know that we pretty much do, then we don't want to over anticipate price action traveling back to a preferred area to sell from. If we're lucky enough to get an upwards move into here or into any area above, then that's where we're going to begin to look for those selling moves. Now, if you play this from where we are, you can see that pricing so far has just come down, and it's playing back into that area of trajectory, which again is more of a reference for directional movement than anything else. So for this week, we have a very, very simple outlook, and that is for pricing to continue going down, or if we're lucky, we have a point of reference here and an area of supply here that we can then look to sell from. Now, our bias, of course, has not changed, and our bearish bias is still the main thing that we're focusing on. So we're not going to expect this to go bullish anytime soon, and if we do see a pullback, then we will capitalize on that accordingly. Remember, guys, there is literature to go with these markups, so if you do want to go and read those, you can follow my trading view, which is Ross Hayes right here. You can find the link for that in the description down below. Let's go over to what we were looking at on gold last week. So the gold markup last week, again, was more focused around the bias that we had, which was price action going bullish. Now, we spoke about this a couple of times in our live streams and of course in our Discord, and we said that price action may be looking for better pricing before it travels high. Now, the point we were looking at was this area of liquidity right here, as this is a pretty key area for liquidity to be stored, as it's below the last lows. So there's going to be a lot of orders sitting in this region, which pricing most likely travels back to in terms of looking for better areas to accumulate orders. Now, when it comes to price action traveling higher, we know fundamentally gold is being driven by many external factors. So we're keeping that in mind. We were looking for the main expansive move up, targeting the high and looking at the trajectory and the liquid low as our 2 points of reference. When we play this forwards, you'll see price action actually came down, took out the liquidity to the left, and then has continued higher. So our bias still stands, as I said before. We're still looking for that pricing to run up into the highs here. Now, keeping in mind that the bias itself did change for a day or so when the pricing created a gap here, and it changed the daily time frame to a slightly bearish bias move, we still know that the principles behind gold are most likely going to drive it higher. So let's go over to what pricing is doing now. And you can see this is the markup we gave out for this week. So price action itself this week, as I just stated, pushed back up. And again, you can see there is literature to this. If you want to go and read that literature, you can. Pricing itself pushed higher, came back and met this area of trajectory. We still have the same target, but we now have a couple of points to reference off of. One is price pulling back down to this area of demand, which was created last week. 2 would be to run down to this low. And 3 would ultimately be pushing straight up immediately. Now, we know we are more biased towards the upside here. As I stated, the upside itself is the preferable move. Our targets are higher, but if we're lucky enough to see lower pricing, then we of course can trade off of that. So key points to reference here are the area of demand and the liquid low. If we break through this low and price action continues to give a strong push to the downside, then expect it to expand lower and ultimately look for areas that you could reference longs if our higher time frame bias remains the same. So for now, areas to focus on, as I said, are the area of demand and area of liquidity. If we push down below that area of liquidity and we reject heavily from the area of demand marked up last week, then we can look to long that again if our biases remain the same. I'm more inclined to see price action coming back to then go higher based off of the way that price has opened up this week. And when we play this, you'll see exactly what I mean. And that's because price has come down, created this low, and it's taken the liquid off the highs here and here. And now we see price action starting to reject. Now, based off of the same principle, we have liquidity stored above these highs here. So I do believe there will be a lot of liquidity stored above this high right here as well, meaning something like this would be a very simple move for Institute to perform, giving them the preferable shift to the upside as we stated. So again, as always, very, very simple markups from us this week. We don't really overcomplicate things. If you haven't already dropped me a follow on TradingView, then please do that with the link down below. And realistically, there's not a huge amount more to cover. If you're interested in joining the live stream that we're going to be hosting in around 30 minutes time, then you can, of course, hang around for that. And we'll be going into some live markups across the major forex pairs. But until then, guys, we appreciate all the love, all the likes, all the comments. I'll see you in the next one. Peace out.